Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for one wild trading day today. And it is Monday, the 25th of January, 2021. Now, over the weekend, folks, I didn't put out my weekly YouTube videos. I had the Moderna shot on Wednesday afternoon for the COVID-19 vaccine, and I had a reaction to it. My reaction was sleep. I was never so tired. It lasted well into Sunday to the point where I'd get up, have something to eat, do a bit of my work, put out my research in the mornings and wrote updates, and we'll go back to bed. So I'm normally up, 16 to 18 hours a day, maybe 19. I slept that amount. It was the opposite. You know, I wasn't up at all. I just kept sleeping, and right through the weekend. So I'm back to normal. I feel good, get the next second shot. And that brings up the talk, of course, that, you know, now they're saying Moderna might be having us all get booster shots for the South African variant. But my nerves are this. I'm sure that they'll have those different variants. What if they find a strain that there is nothing for? They have to go back to the drawing table again? I don't know. Did you watch GameStop today? I watched it. Wow. What happens here is you get short sellers that come out off of fundamentals. They look at a company in this particular case, and many people think it reminds them of Blockbuster, where you can do everything that GameStop does, basically, the way Blockbuster did, but it's not an online service. It's older games that you buy, and why do people need that anymore? You know, when's the last time you went out to a Blockbuster? You don't. So that's the theory that the short sellers have. Well, they got annihilated. Why? More buyers than sellers. I can't tell you why there's more buyers or sellers, but what a move. Unbelievable. I'm sure it's getting the SEC's attention, but I don't think there's anything that was wrong with what's going on. They're forcing the shorts out of the market. That's how I'm viewing it. Believe me, I'm not in the judiciary, I'm not with the SEC, but I didn't see anything wrong, and that's the interesting thing. Did it stay up like it went? No, but it gives us ideas as to what's going on with these Robin Hood type traders. And when I mention that, I'm leading you into this for a reason. At the same time, over the weekend, I'm reading a big story, and I think it was in Bloomberg, a big story, as to how many Robin Hood traders are now converting accounts and going back to working with advisors, be it they buy advisory services, they're working hand in hand with them because they've gotten a taste for how volatile it is, and that's what they think isn't the right thing for their portfolios. I'm not writing this. I read it. I've kept the article if anybody wants it, but I'm pretty sure it was Bloomberg, and it was over the weekend. I'm pretty sure. I'll double check it. All right. So let's go to the chart action today because it's interesting. Now, the first thing to remember when we get here to biotech, I don't know why this became so sensitive, is we have the FOMC meeting this week. You know that there's talk galore about the biotechs, more need for them, not enough vaccines. These companies just are going to get demand for their products. And you're seeing that as the market's hitting an all-time high in this ETF. When we look at the action, you've got a pattern of a higher high and a lower low. So when we broke down in the middle of last week, we took the traders out of the uptrend. That didn't last very long. Where did the market go to? I have a line in the sand that I teach in my charting course, and it's the 18-day average of closes. And from there, the market often decides what it wants to do. Example, it fell down to there, came back, couldn't go anywhere, broke again. Went up, fell back, fell right to that average, held it. Admittedly, you didn't go back to the 18-day average this time, but you certainly made a run at it. And where's the resistance point? The upper Bollinger Band. You haven't hit it yet. Tomorrow it comes in higher than 158.53. The way the math will work, that'll drive it up. And what's the driving force? Well, just momentum, but it's overbought. So I have an overbought market that's not trending. It has a higher high, lower low, and it keeps going to the Bollinger Band and stalling out at that number. Interesting, but I wouldn't know how to play it. SMH, yeah, I know what to do with markets like this. When I have an embedded reading, embedded simply means that the market's converted, in the case of bullishness, an overbought situation and locked in bullishness to it until the red line closes back under 80. The word is closes under 80. Haven't done that. When this pattern develops, I look for the breaks in markets like you're seeing. There's a key moving average I show in my morning paid subscriber video that you have to go to our website and sign up for, and then you can watch it in many different ways, but you need a user ID and a password that the traders are buying off of, and their target remains going back to the Bollinger Band until that pattern doesn't work. And right now, it has been working like a dream. We'll see how long it can last, but till it stops working, it's working. When we come to XLI, downtrend. You've had lower highs, then you closed on Friday for the first time right here under the 18-day average, trying to make a run to the lower Bollinger Band. It could still happen. You peaked out at the upper band. Why not go down to the lower band? Momentum down, trend down, bias down. I think the pros will be selling at 88, 86. If you get over 89, 89, I think you take the bears out of the market. They'll go to a neutral posture based on this particular chart formation. On the energy sector, you finally did what I wanted. You fell back from this upper Bollinger Band to the 18-day average of closes. I was looking for this to happen over time here because you had lost the embedded reading last Wednesday. When you lose that, it's often a prelude to the price and the 18-day average making a run at each other as long as the day after it's lost, it isn't regained with an embedded reading. Now, it's embedded here. I'm going to carry it to what it does. You lose it on Thursday, right? Did you get it back on Friday? No. It went right to it, but that's the key. So now all you're doing is getting a market that's trying to hold that. We'll see what goes on. We get API numbers tomorrow, and we get EIA numbers on Wednesday. We're out of the holiday frame, so we're starting to get more normal back to our reports in the market. By the way, today, you know that Janet Yellen passed the Senate. She has a confirmation from them to be our next U.S. Treasury Secretary. And about 40 minutes ago or so, I was watching as the House of Representative managers, they call it, went over to the Senate, delivered the articles of impeachment. They were read on the floor, and now there's discussion. The trial is set to begin, doesn't mean it's in stone, February 8th, and it's another historic moment. I mean, these things are happening fast and heavy against ex-President Trump. In terms of the QQQ, higher lows, higher highs, but overbought into the upper Bollinger Band where you rarely stay over that number. Now, we have approximately 13 Dow companies reporting this week coming into today and 100 S&P 500 companies, and you know you're getting the Apples, the Amazons, the Facebooks. So these markets are waiting for those earnings is what I think is really going on. As we look at the emerging markets, as I told you, this was a crowded trade. I hate crowded trades. Crowd means everybody gets one-sided. And the trade for the year, oh, it's emerging markets. Well, our work got lower highs, lower lows. It said, now you're going to get a correction back, and there's that line in the sand. Eventually, yeah, I do believe emerging markets will be fine. But when you get crowded, you first got to take out some of those crowded people. Got to be careful about that. GLD, we have the trend up. As you can see, you've got higher lows, higher highs. However, the bias, because you're under the 18-day average, is down. Bias is simple. When you're under the 18-day average, it's down. When you're over it, it's up. Could it be any simpler? It's a filter on swing lines. So when I have the trend up via the swing line and the bias down, I have nothing. And then I look at a market that's oversold. I wouldn't know what to do. What the market is doing is it's fighting a battle between the 200-day average and the 18-day average, looking to see what the next move is going to be. In the gold miners, well, if you're not really good in GLD, how are you going to be good in GDX? Oversold, higher high, lower low, same thing. I don't see anything in this one. As we step next over to the, let's get this right through here, TLT, I'm not surprised on any of this. We've been oversold, going sideways, so the market rallies right up to what? Gee, let me think. Isn't the FOMC meeting this week? So the market gets neutral in front of it, trying to see what the Fed says. Bloomberg sent me a question late in the day for their TikTok, and they wanted to know, with $27 trillion in debt and climbing, is the Fed going to be worried about that and wanting to change its monetary policy to raising interest sooner? And my answer was very clear. I just listened to what Jerome Powell, the Fed chair, said. No. They'd rather it runs hot for a while. You've heard that from Clarita, the other Fed presidents. Let it run. They haven't been able to get to their 2% target in a decade. Let it get there. They'll then take a look. Let the economy pick up and get out of this malaise, this problem it's had from COVID-19. That's what the Fed, I think, is said, and that's what they'll do. Yet here's the market. We were back here pushing the 111, if you'll remember, the 10-year note rates. Now you're back to near 1%. So you can see how these markets swing in front of the Fed. And last, on the FXE, we've had the swing line in an uptrend after hitting its downside targets right here. But you're under the 18-day average, biased down and oversold. No setup there just yet, one way or the other. You know, one of the things I love to do is tell you that in this crazy action you're getting, I know that a lot of you are SPDR ETF traders. Did you know that you could trade with us, though, in the futures markets and trade the 1/10 size contracts for as low as $1 commission per side? And don't tell me your brokerage firm gives it to you for free. They don't. I don't know of one major brokerage firm that offers futures for free. That doesn't mean they don't offer stock trading for free. And as you know, nothing's for free. They're getting paid from the person taking the order on the other side. So they're making their money. They're just not charging you. Well, in futures, you don't get paid from the other side of a trade. These are all 1/10 size contracts. So instead of $50 a full point, it's $5. The ticks, well, you can see what they are. They're small, 50 cents a tick in the Russell, for example. So this is a way you can build positions in futures, 1/10 the margin, not expensive commission. If you'd like to give this a try or know more about it, it's really simple. All you've got to do is call my staff. They can get you set up with whatever you need. You can go to this, www.IraEpstein.com, but then put in the /micro. That is how you get to all that explanation. I'm Ira Epstein. You have a great day. I'll see you tomorrow.